think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today, I'm going to talk about the Chinese equities or stocks that I am investing in, and they are very cheap right now. So the Chinese tech sector has been getting killed, absolutely killed. It was already cheap to begin with. Some of you may remember when I brought Gare Soloway on back late last year, and we talked about how the Chinese sector was definitely oversold. It was undervalued and everything. Even stocks like Alibaba was definitely undervalued. And so we're going to look at some of these companies, and we're going to look at some opportunities where we can actually make some massive gains. Obviously, there's risk when you invest in foreign companies or international companies, and we want to assess those risks and actually look at it objectively and say, okay, are we willing to take this risk? So for me, I'm personally willing to take these risks. I've been buying up these stocks this past week, and I want to give you all an opportunity to get in while these stocks are very cheap. So let's get to it. All right. So the first thing is that the Chinese stocks actually sold off because the SEC came out and mentioned something about delisting some of the Chinese companies. I've noticed that this has happened multiple occasions. We saw that happen with Luckin Coffee. We saw this happen with Didi and a few other stocks. And every time this happens, the rest of the Chinese sector just gets killed, absolutely killed. So we're going to look at this objectively. So just looking at this article right here, CNN Business. Chinese tech stocks plunge after U.S. names companies for potential delisting. Now, that's very scary. I mean, people reading that headline that may be invested in some of these companies may be like, wow, I need to get out of here and sell off or whatnot. So they may be running for the hills, right? And then when you look at what they have on the front picture, they have Tencent, they have Alibaba, so you got these big, huge companies on the front picture, like as if these are the companies that are going to be delisted. So now let's read it a little bit. So popular tech stocks have plunged after the U.S. regulator named 5 Chinese companies that could be removed from American stock markets for failing to meet audit requirements. The names cited by the U.S. Securities and Exchange Commission, that's the SEC, on Thursday are fast food company Yum China Holdings, tech firm ACM Research, biotech group Beijing, however you say it, Beijing, I think Beijing. That sounds more catchy. And then Zai Lab, as well as pharmaceutical company HUTCHMED. So they're naming the actual stocks that they are talking about delisting if they don't get up to compliance with the audit agreement between the U.S. and the Chinese companies for them to be listed on the New York Stock Exchange, right? So let's read some more. But big tech stocks also fell because investors are concerned that more companies might be added to the U.S. regulators list. All right, so there's a lot of fear right here, and Jim Rogers says, buy fear, sell hysteria. Right? You buy when there's blood in the streets. This is how the big investors make money. You have to buy when there's blood in the streets. You have to sell greed. When the market starts getting greedy, you have to sell that, but you have to buy fear. So companies like Alibaba fell more than 5% Friday in Hong Kong. The U.S. listed stock ended down 7.9% on Thursday. JD plummeted 11% in Hong Kong after closing 16% lower on Wall Street. Baidu was down nearly 5% following a 6.3% drop in the United States. Let's go ahead and look at some of the stocks, though. So let's go to some of the stocks. So right here, we're looking at Alibaba, right? So right here, we're looking at Alibaba, right? So we're going to look at the 5-year chart. And let me go ahead and just kind of so you guys can see what's going on here. All right, so we look at this. All right, so back in June of 2018, Alibaba was at about $207, and then fell to about $131, and then it shot up after COVID hit. It skyrocketed to about $310, and then now Alibaba is trading at $86.75. $86, y'all. Now, this is very cheap. Let's see when the last time this company was actually there. Let me go ahead and go to candlestick. I mean, I understand the line graphs and things like that can look a little easier for some of you, but I have to look at the candlestick. So we see how high it went. It went, to 300, and I think the high was 319, close to $320. And when you're looking at this, let's see. It's at 86.71. So the last time it was at this price was around 2016. December 2016, it was at $86. So this is very, very cheap. I mean, this is how long ago? 6 years ago? So we have to look at these things. We have to look at these things. Okay, this is very undervalued, and this is a good play. So I've actually been buying this company. So that's just one company. So let's go ahead and go to another one. Let's go to JD. JD, solid company. Look at this big gap down. Y'all see this? Look at this big gap down. This is on the weekly chart, by the way. So when you're looking at this, so JD dropped from 60, it was at $64. Now it's down to $47. This is very, very cheap. JD's high in the past, couple of years was 108, 107, 108. And now it's trading at $47.99, somewhere around there. So let's look at JD. Let's look at how much it's grown. So you had, obviously, it hasn't been to this price since about 2018. That's when it was at this price. And then it had a big correction down to about $19. And then even when you look at, March of 2020, it really didn't fall that much. So, it fell to about 32, shot all the way up. Now it's trading at about $47. So let's go ahead and look at another one. All right, let's go ahead and go to Baidu. Another amazing Chinese tech company, right? So Baidu has always been above the price that it's at right now. It's been above it majority of the time. That's about 118. So obviously in 2013 it went down to about $82, but it was trading above that back in 2013, 2012. And then when you look at this, so Baidu in 2014 was at $253. Traded down, so looking at it long term, this stock is usually above $200. Now you had this period right here where it traded at about $90. So when pandemic hit in 2020, it traded down to $81, and then it just shot straight up. As you can see, $360, somewhere around there. And now it's trading at about 118. So this stock is very, very cheap. All right, we're going to look at another one. All right, KWeb. KWeb is an ETF for a lot of these China internet stocks. So let's look at KWeb. So KWeb currently, let's see, it opened in August of 2013, right? August 2013. It was above, let's see, where was it at then? $26. So this red line is where it's at now. So when this stock opened, it has never went below this price. It is since 2014, it has stayed above $24. Now, that says that this is very cheap to me. So it stayed above $24 for a long time, since 2013. We're almost 9 years later, somewhere around there. So you see that it traded up, 2018 went up to $68, came back down, to $36. The pandemic hit around here, went down to $38. Even the pandemic didn't even destroy this stock. Then it spiked all the way up to about $104. Now it's trading at about $24. This is very, very, very cheap, y'all. Very cheap. Very cheap. We're going to look at a couple more. All right. Let's look at Billy. All right. So Billy was trading in, I believe this is a Chinese equity, y'all. I believe this is. So Billy was trading in 2018. We can see that it was at about, $8 or whatnot. It went all the way up, to $157. Now it's trading back at about $19, $18. So Billy is another good one. Now let's go to another one. Let's go to Tencent. WeChat. All right. WeChat is currently trading at $44, right? So WeChat is an internet social media gaming company for China. So we see, look, WeChat back in 2014 was at about $16, trended all the way up, got up to about, $60 in 2018, came down, went all the way as high as almost $100. Now it's trading at $44. So it's almost back to its pandemic low. Pandemic low was about $40. WeChat, Tencent is at $44 now. So I just bring that up because these stocks are very cheap. You want to buy when there's fear in the market. And you can see by these candlesticks that these stocks are just getting sold off drastically. And so I am in here buying up. I'm willing to take the risk. I mean, just the upside is just massive rewards. So I'm willing to take this risk. So I just wanted to give you all just some of the companies that I'm actually buying into, and so that you can think, act, and prosper for yourself. Obviously, this isn't financial advice, but I want you all to be able to succeed with me. I believe that these stocks are very cheap. I can invest in these stocks with conviction, knowing that, the possibility of them going back up and going extremely high is, I think it's pretty good chances. So I want to thank you all for joining today. Remember to hit the like button, subscribe, comment if there's any other stocks that I missed that you may be investing into, so I can look at those as well. So I want to thank you all for joining the Money Level Show, and y'all have a good day. Peace.